What is capitalization and how is that used with regard to business entities? Well, to begin with, capitalization strictly refers to providing capital or working resources, generally in the form of cash, into a business. So if you capitalize a business, you're putting capital into it, meaning that you're funding it. So we oftentimes use the term loosely to refer to funding transactions. We also use it to refer to the total value of the firm. So generally, if you were to say what is the market capitalization, the total value of the firm out there, you would say what is the number of shares times the dollar value per share. Now this is easy for a company whose shares are traded publicly and people are buying shares for this amount. Then you can easily multiply the number of shares times the value that it's being traded for, and that is the market capitalization. That doesn't work well for startup ventures because it's not publicly traded. You can't get a simple valuation based upon market trading rates for the number of shares. Also, things like how much money was invested in the company initially is not a good indicator because the company has grown and it has become more valuable because it produces more revenue or has the potential to produce more revenue in the future. Oftentimes, valuation is based upon the contributed capital and the retained earnings, but again, in a startup venture that's growing rapidly so that it can ultimately produce more revenue in the future, it may not have any retained earnings. It may actually be incurring losses every quarter, every month. And any money that has been invested in it thus far has been spent as well on growth. So again, that wouldn't be a good way to determine what is the capitalization of the business by referring to it as the valuation. So oftentimes, particularly in startup ventures, when you say capitalization, you're really looking at what the value is. So you look at other valuation methods. And the most common are comparables. Comparables are used primarily in valuing non-public, easily ascertained market value of individual shares. So you just look at comparable deals, transactions, companies, look at the valuation ascribed to them by other investors or acquirers of an interest in those companies. So you look at comps, as they call them, to determine what is the value of your firm with respect to other similar firms, or your deal in a firm with regard to other deals. The most widely used in a mature market where it's where the company has sustained revenue quarter over quarter, month over month, then you can take a discounted valuation of the cash flows. So what is the discounted value of future or expected cash flows of the business? And this is how you come to a valuation. And then lastly is the asset valuation or the accounting valuation. And this is generally not a good indicator, particularly in startup ventures that have value outside of the asset it possesses. So also, even in mature businesses, a company is far more valuable than simply the assets that it has on hand because, once again, it has market presence, it has intangibles, it has operations that otherwise aren't accounted for as simple assets. So with that being said, any of these three methods can be used for valuation, and that would be a substitute for what we would otherwise say what is the capitalization or how much money is it worth or does it have on hand in the business. So anyway, these are the ways that the term capitalization is used and ways in which you can think about it in terms of mature and startup ventures.